Good morning, everyone, and welcome to the morning market analysis and trade plan setup for Wednesday, May the 7th, 2014. My name is Doug McKay. I am the founder and head moderator for Quantum Leap Trading. Quantum Leap is a private organization. It's not a commercial organization. I could speak. We're a self-organized learning environment. We have a private Skype room that's coming up onto 5 years almost now, and we have a room that we talk about the market, share our trade ideas, and then each morning we come into the session and I do my market analysis and then set up the trade levels for the day and my hypotheses. If you're watching this on YouTube, we do a routine, and we start with the key numbers and the macro trends from the macro to the micro, and then we get into some more in-depth chart analysis and then start setting up the trade levels. We don't skip those those steps because we're preparing to trade for the day, and it's very important in your trading to have a daily routine that you go through, and it gets easier and easier as we go. But sometimes it's a little mundane if you're watching this after the fact on YouTube. Of course, you can contact me on Skype, Doug_McKay. I'll be the one from Windsor, Ontario, Canada, or you can send me an email to my email address at d.mckay@stealthtrader.com. We're getting prepared to launch the Stealth Trader website and the new live trade room that's coming in the next 30-40 days. We're pretty excited about it. We've got the new fund set up, and Stealth Trader is started trading that a couple days ago and having some exceptional results as always. Of course, I've got to get the legals out of the way, so let me do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap or Stealth Trader are for education purposes only. Please trade your own trade plan. Do your own due diligence. Okay. So let's just take a look at what went down yesterday and what we had set up for our levels. So let me just. All right. So this was the chart, and we're working actually with Stealth right now. I'm working with Dr. Bogdan and our head programmer, and we're actually going to be incorporating a level chart or a volume profile gauge into the Stealth analytics. So sometimes this chart can get a little bit confusing for people that are not familiar for it. But again, that's why we put the video up on YouTube. So if you do a Quantum Leap trading search on YouTube, you'll find the video. We post the link to it on Twitter each day. And it's good to not just look at the chart, but look at the dialogue around why the levels are there and what our hypotheses are. So yesterday our line in the sand that we talked about was that 74.50, and we said that above 74.50 you want to get long into that first target at 75, which was the microcomposite VPOC, and the 76 with a possible continuation to the naked VPOC from yesterday up at that 77 or 78, 75 with possible resistance at 77. But the key was, we said if we couldn't break and hold above 74.50, then we're likely to get a rotation down, okay, with our first target being that 72.50 and then 70.75, that CLVN, and then a move down to do a 80% value area play down to 68.50. And then if we broke 68.50, our main target below the CLVN at 68.25 was that 65, 64.75, which is the the composite VPOC, the microcomposite longer-term VPOC, with a possible move to test the range low down there at 60.50. So what happened is we opened the market right at that 74.50. We couldn't get above it. They rotated down. They went and hit our 72.50, went down to our 70.50. Buyers, we said, remember, watch for responsive buyers to step in at that 70.75. They stepped in. They fought that level. They tried to break back up, okay, tried to get above that 74.50, only got 4 ticks above it, failed. Sellers, responsive sellers stepped in, didn't even close the naked gap or the naked VPOC, and then they brought it back down to that, all the way down to that key line in the sand that we were talking about, the 68.25, and then responsive buyers stepped in again, rotated us back up, chopped around, and then they ended up selling off. And once they broke clearly through that 68.25, we got a rotation down to our main target below at 64.75. And then we just chopped around that with a push down. Didn't quite get down to the 60.50. We only got down to 61.75. Sue me. You got to give me a couple ticks here and there on either side of these. So let's go into our homework session, take a look at our numbers, and then work our way down. So yesterday, our key area that we're trading right now, the key numbers on the macro level, of course, we're above 1837.75, which is the year open. We've got the 1892.50, which is the all-time high and the year high. Our month open at 79.50, and we have a high up at 1886 right now, and our month low is 1860.50, which is that range low from the other day. So that's a key level that you want to keep an eye on. Nothing else really jumps out at me for the macro. So taking a look at yesterday's Globex opened at 1877.50. We had a Globex high at 81.50 and a Globex low at 72.25. And then we opened auction in range right at that 1874.25. I thought it was 1875, but what's a tick amongst friends? And then we sold off from there. But we, did have two-sided. It wasn't it was a weak open drive, and it was kind of two-sided. So, Howard went with an open auction in range, and I agree with that. But you could call it somewhat of a weak opening drive as well. And then we broke the IB to one side for a normal variation. Our opening swing high, 74.50, opening swing low, 72. So take a look at your market clues, your auction clues. Okay, we opened auction in range. We had a 2.5 point opening swing against a day that was the prior day at normal variation, and we had a weak tail on yesterday's. It was improperly auctioned. We had a higher distribution, not yesterday, but the day before yesterday. And then the clue, additional clue, was we had a opening swing which was greater than 2 points. The market on open orders had a disparity in perceived value. Usually when that happens, you're ending up with a rotational day. So we go through our checklist of, we're looking for the market to give us clues on whether we're going to get vertical development or horizontal development. Or in other words, are we going to get a trend day or are we going to get a rotational day? And clue number one, what type of day did you have before? Clue number two, where did you open? Inside range, inside value, or outside range, outside value? How big was your opening swing? Was it 2 points or greater? Okay, all these clues were pointing towards a rotational day yesterday. Got to start reading the auction. Our initial balance high, the first hour high, 74.50. Initial balance low, 69.25. We had a pretty tight initial balance yesterday. All the intraday numbers except for the low were lower. We had a lower 1230 number, 67.75, lower high at 75.50, lower low at 64.50, and the VPOC shifted down to 1870.75. Now the clue to this is we did have a lower VPOC from the prior day, but we left the VPOC above us yesterday. And look where we're trading right now. Okay, we left value above, perceived value was still remaining above. We sold off, in the afternoon, and then they took it all back, during the course of the Globex, and came right back up into that level where they left value. If value doesn't shift, you're likely to rotate back up and test it. And then our 20-day ATRs are currently running right now just over 17 and a quarter. You can see we're starting to tighten up again on our ranges. Our 20-day ATR target, or 20-day ATR range on the full session is just over 19 and a quarter, and Globex is stabilizing now in between that 9 and 10 point range. Value area high 75 and a quarter, value area low 64.75 for a 10.5 point value area. Value areas are still somewhat large right now as they're trying to break out of this balance, but they're having trouble. You can see we tightened up, and then we're expanding out as they're fighting both sides of it. And then we had a make and break on the IB breakout at 9:31 Central to the high side, and volume was pretty normal at 1.2 and 1.3. Going over to the daily report, our 20-day ATR calculator gives us an ATR target, full session ATR targets at 1880.25 to the upside, 1852 and a quarter to the downside. Of course, we had Canadian non-farm productivity and unit labor costs at 8:30. The big news right today is Yellen, and I think that we're going to stay and chop around in balance until she testifies. So you got her testifying at 9 Central, 10 Eastern, and then you've got crude inventories at 9:30 Central, 10:30 Eastern, and then you've got the 10-year bond auction at 12 Central, 1 p.m. Eastern, and then consumer credit at 2 p.m. Central, 3 p.m. Eastern. So got a fair bit of news on top of everything else with the headline news, so just want to be careful, especially within the first hour of the day as Yellen comes in to speak. And you never know what she's going to say. So let's take a look at the macro to the micro, as I always like to start my day. The chart you see here are monthly candles, and the one line here is the 9 EMA. This is the 20 SMA. These are always the moving averages you're going to see on my chart. That's what I prefer to use myself. So we've got good slope, good separation of the 9 and the 20. We're trading in the upper distribution of the prior month and above the prior month open still. The trend is very much intact on the monthly. I still say the big picture goes higher. On the weekly, same thing. We had a bit of weaknesses. We closed for the first time, all the way from this week down here below the 20 a couple, 4 weeks ago, and then we popped right back up, and now we've got slope and separation again on the weekly. The weekly is still pointing to a higher move. We do have a possible head and shoulders setting up on the weekly, but lately they haven't really been finalizing and setting the pattern up. But something to keep your eyes open for. The daily shows a much different picture. We are in daily chop right now. We are in consolidation mode, and there's no clear trend on the daily. So the bigger picture is still showing up. The daily starts to show a little bit of weakness, but currently right now we're trading just below the 9 EMA. 9 EMA on the daily right now is at 1870. It corresponds with that 1870.75 CLVN, but we're holding above the 20, which is there at the 1860.50 or 1860.75, which is another key level. Going over to the geometric chart, not a lot of information here right now except for this energy point that I talked about yesterday. We've got this major energy point right here in around this 1842 to 1840. There's 4 different pitchforks on this. There's the long term in this one right here, which is the long-term upward sloping fork, and then I've got 3 opposing time frame downward sloping forks. And currently right now, this particular fork, we tried to break out and failed to get above the upper line, and so far we're staying inside. A move down to test the center line today would take us down into this 1844. Now it is the 7th, and this energy point is is scheduled to hit sometime in the next couple days. It doesn't mean we're going to do it, but it's certainly, if we fail to get back above that 74.50 area again, I think we're going to see a move down. And of course, with news coming into the marketplace, with Yellen speaking, who knows? It could be the catalyst to move us back down towards here, or this could fail completely and we can break up. But today I'd be looking at this level right here, the upper line at 72.50 as a possible breakout of the current downward sloping fork, and a move down to that 42.50 area to test the center line and the upper line of the downward sloping fork, and getting close to that energy point down here. So let's take a look at the trend just going into the intraday trend going into this marketplace, see what we've got in terms of trends coming into the RTH session. We had a bit of a breakdown here on the 4-hour, created a really nice technical gap right here, actually a technical gap with the Mr. Sneaky, and then we rotated up and closed the tech gap against the 9 and closed the tech gap. If you're not following these tech gaps, put a couple lines on your chart, the 9 EMA and the 20 SMA, and start tracking these suckers, because they will pay you over and over and over again, especially when you get combinations of the tech gap, okay, which is this gap, the space here as price moved away too quickly away from the 9 EMA, it sets up a gap, and then you get the inside bar, the Mr. Sneaky, and a rotation back. Very high expectancy. If you're not trading them, you should be trading them now. But overall, the trend is sideways on the 4-hour coming into the marketplace. On the 30-minute, you've got a start of an upward trend. We have another bit of a technical gap right here with the Mr. Sneaky, likely to consolidate sideways coming into this market, and this technical gap will probably close based on time and on price. Time is when the price simply goes sideways and the 9 EMA slowly catches up. Price is where the price moves back towards the 9 EMA and closes it. Usually it's a combination of both. This particular one, the way it's setting up right now, looks like it's likely to close by moving sideways, maybe a little bit of price, probably close in around the 68.25 with a test of that CLVN. But a little bit of a trend on the 30-minute coming in. Going to the 5-minute, you can see how these technical gaps work on all different time frames. Here's a beautiful tech gap, okay, not quite Mr. Sneaky, but close. What was the low here? Low was 70.25, low was 70, so you double bottom, so it doesn't qualify for Mr. Sneaky, but beautiful tech gap. Come down, close the tech gap against the 9, close the tech gap against the 20, and now we've gotten below the 9 and the 20. We have a MA hug here. This is a decision point. We don't know which way it's going to go, but we know it's going to break to one side or another. Anytime you get the MAs coming together as what we call an MA hug, you got a chance for a breakout to one side or the other. So nothing really gives us, so we don't really have any discerned trends coming into this market. That's going to lead me to believe that we're going to open auction in range, in value, and we're going to get some chop on this open as we're waiting for Yellen to speak. So let's take a look at the big picture. On the big picture, the most important number you've got right now is the 64.75. That is the current microcomposite VPOC, the most traded price, okay, going back on the microcomposite to February 21st all the way to yesterday. But also it is the composite VPOC. My composite goes back to October the 9th, 2013. Not that that date really means much. Well, we're trading in here because we haven't traded up here. The most important thing, though, is the microcomposite VPOC is currently still at 64.75. Now, we're getting this double distribution here, okay, between 64.75 and 72.50. And you can see that the value area for the last, the smaller microcomposites, and I do draw my microcomposites differently than FT does and some other people do. We can get into, I have a webinar on the on YouTube that talks about how and why I set my microcomposites up the way that I do, and what I'm looking for basically is where they found value, where they tried to hold value, and where they would likely break out of value range and rotate down to pick up buyers or pick up sellers. But currently, I digress. Our value area high right now on the microcomposite is 79.50. Our value area low is 63. So we are trading inside of this value area, and on the bigger picture, we're above the value area of the longer term time frame that's at 67.25. Now the 67 to 66 area I really want you to pay attention to today. And we've got the 68.25. We know that that is our CLVN that separates the 64, 75, and the 72, with 75 being the shorter term microcomposite VPOC. So above 68.25, okay, I'd be looking to get long into 69.75, which is the microcomposite VPOC, where we tried to hold value before breaking down and going and finding buyers down here at this 43.50 area. And it's also a little bit of a CHVN right here. So that would be my, if we stay above 68, or we get above 68.25 and we can hold above it, then you want to get long into the 69.75. Make sure you get scaled there with a hold to a rotation back up to that key number right now, the other distribution in this double distribution zone at 72.50, with a continuation likely up to the VPOC at 75, because that takes us above the overall value at 67.25, the value area high on the larger time frame microcomposite. It gets us above the separation between the two distribution points, and it gives us a rotation and keeps us inside of the value of 63 and 79.50, and a likely rotation up to 72.50 and 75.50. Now, the problem is below 68.25, we can't use that 68.25, and I'll show you why in a minute. We have the overall value area high at 67.50. One second. But let's take a look at the, I'm going to come back to the composite. I just want to show you the picture on both the composite and not the composite, the Globex, and yesterday. So yesterday we had a double distribution zone. Okay, look at the LVN. The LVN is 67.25. That's right at that that value area high for the long-term microcomposite, with your HVN and where we left value yesterday at 70.75, which is the upper distribution most accepted price. Below the 67.25, the most accepted price was that, what? Guess it, 64.75, the composite VPOC, and the longer time frame microcomposite inside of value below that 67.25. Now take a look at overnight. Okay, overnight we got a double distribution zone. Again, where's the LVN? 66.25, with the upper HVN being 68 and the lower distribution being that 63.75 in the current microcomposite VPOC. Although we could get a, not microcomposite VPOC, Globex VPOC, we could get a VPOC shift here before the open at 68 here in this double distribution. But the key point is that we've got that 68, which yes is our CLVN, but the bigger number, you got to take the macro down to the micro, okay? And the most important number right now is going to be that 67.25 to 66.25, so that 4-tick range. So in terms of trading this on the bigger picture, okay, you can use the 68.25 and a break above that to get long into the 72, the 69, 75, 72.50, and 75. But you got to wait below. You got to wait until we get below this 67.25, if not waiting to get below 66.25. Now 66 and a quarter and a break below 66 and a quarter puts you right there with a major magnet at 64.75. So you still have room to get in and get scaled, okay, to take the short into 64.75 with a move to test, a possible continuation down to 63, and then, what was the 60.50, which is now shifted to 59.50 CLVN, with that 58, okay, being the big target below, and what I would consider to be the move to the other side of balance around that 64.75. So you really have to treat this 67 and a quarter to 66 and a quarter as a slush zone and wait until we break below at least 67 and a quarter, if not 66 and a quarter, for that move back towards 64.75. And we can't break above 68 and a quarter, then we're likely going to get that move down to 64.75. I just want you to be careful because you've got the value area high and you've got the LVNs from the Globex and from the yesterday's intraday that you've got to keep an eye on. A push lower, and on SOAR News, look for a move down to the 55 and a quarter as a key line in the sand. Below 55 and a quarter, I'd be looking for a bigger rotation. You really have a flat profile down here, and you've got these wicks right here, these two wicks, and then you've got a bunch of wicks in here from 43 up to even 59.50. So we could come down here. This is a pretty blunt area on the composite, and we just get stuck in the wicks and we chop around as we properly auction this territory to the low side around the key number at 64.75. So really, this whole area right here between 66 and a quarter and 68 and a quarter, I would make that your no trade zone, and above it, get long, below it, get short. And if you're short, try to scale before 64.75, but you're a multi-lot trader, stick in it for continuation to push to the lower side right now and come down towards this 59.50 and 58 and a quarter, possibly 55 and a quarter. So let's take a look at our overnight and start moving our numbers over and setting our levels up for the day against the intraday. So, of course, our overnight high right now is 71.50. You can see they took it up back into the upper distribution and back towards value that we left behind yesterday with the naked VPOC from yesterday at 70.75, which is also right at a key CLVN. Here we are making a little bit move down to test that 66 and a quarter. And then our low for the night is 61. Which is basically, one tick below, two ticks, 61, 3 ticks below yesterday's low. Our naked close is right there at 64.50. Funny how we, came down, chopped around, and found value and accepted long-term price acceptance. Funny how that happens, eh? Value area low is 64.75. Value area high is all the way up at 75 and a quarter. So we have a pretty diverse value area with the two distributions and being separated at 67 and a quarter. Our current VPOC right now is 63. Could you do me a favor, Howard? Just do a download and see if it's shifted up to this 69, just to make sure that I'm going to put it down here right now at 64. They're not even going to wait for this. They're trying to make a breakdown here. 63.75 is where I'll put it right now. Then you can just confirm that for me. And that's going to be right below your value area low, your naked close, and right in the heart of this double distribution zone. So as I said, I would be using this area right here between 66 and a quarter, and we're going to put it right at, so it goes between as a slush zone, and again, you can't get long until you get above 68 1.25. And I should just expand this. In fact, what I'll do is I'll just do this and we'll overlap them. All right, this is a no trade zone. Don't trade here. It's going to be choppy. Okay, above 68, you want to make a move with our first target above it at 69.75. And then, oh, not a trade area, sorry. Target. So you want to get scaled by 69.75 with the main target above at our upper distribution HVN and the naked VPOC at 70.50. I'm not going to mark it on my chart. Everybody knows that a naked VPOC is a key level with the overnight high at 71.50. Okay, this is also a very interesting setup because the fact, remember, we have a 96% probability of taking out the overnight high or the overnight low. And right in the middle, we've got 67.25. So, below that, okay, you've got to be looking for, the 96% probability to be taken out to the low side. Above the 68.25, you've got to be looking at the overnight low being taken out, or the overnight high being taken out with a 96% probability. And so that's really a nice setup right here. And then above 71.50, we've got the 72.50 CHVN. Oh, come on. Forever I keep saying I'm going to fix that button, but I don't do anything about it. And then, of course, you've got the open from yesterday at 74.25, the IB high, but the big number is the value area high, okay, and our shorter time frame microcomposite VPOC at 75. So I'm going to put this right at 75, front run the value area high, but you've got a naked VPOC that we didn't take out and a range high at 75.50, so you're likely to get a push through at 76. I would not take this as a breakout area because you can see responsive sellers stepping in here at 76. You would have to get above this this 77.25 to take a breakout for a move to test that 1880 level, and really the level I'm looking at above. So we'll make the 77.75 as the trade area with a breakout to 80, but the big number that I'm looking at above is that 81.50. That's where they tried to hold value. See this microcomposite VPOC? That's where they tried to hold value when they went up after that, making that new all-time high at 92.50. And then long-term target is going to be 86, which is our extended target. Remember also that your 20-day ATR target to the upside is that 80.25, so that fits with the range high here at 80. The current month high is 86, and then the really big target above is that 92.50 all-time high. Oh, come on, draw it for me. Okay, so that takes us up to the upside. Of course, 1900's up there too, centennial number. To the downside, below 66.75. Okay, we've got 64.75 as our big target. That's our main target below. 64.75, and we're going to put this in here. And we're not even going to call it a target. We're going to call it major magnet below 66.25. Okay, and bring that to the front. And then below that, you've got the naked close at 64.50. You got the overnight VPOC at 63.75, and there's really nothing below there except the you've got the 63, but it's really the range low that I'd be looking at. But you've got the overnight low, a couple ticks below that. So, and then you've got the 5950. So I would just, have those as extended targets, and I would use this 5950 as an area that you could get responsive buyers stepping in to take us back up into range and hold us inside this distribution zone around the 64.75. And I really think we're going to get some serious chop today, and we'll probably test, both distribution points, 72.50, 64.50. Possibly see some weakness depending on what Yellen says, and a move down to 55. And below 55, then I'm looking for a bigger move, and the big target below is this back down here at this 40, well, first 49.50, but the big target is 43.50. So what we're going to do here is we're going to use 55.25. Okay, and then we're going to use a target of 49.50. Not to diminish that 50-50, because if you've been around long enough, that 50-50 was an important level early on when we got up to this area and this distribution. And then 45.25 as a trade area. And the big target below is that 43.50. And just in case we really, fall off a cliff, you've got the 39, which is still, to me, a very important number, CLVN, because below that, you're going to get a move down to test the year open at 37.75 and take out this naked VPOC at 36. So we'll put 39. You still got a naked gap close here at 39.75 as well. And then below that, 37.30, 37.75, 36. And then once we're below that 39, you got to be thinking that this triple distribution is going to come back into play, and those numbers should be, seared into your mind. 35.25, 29.50, and 25.25. Okay, so that's what we're looking at. Let's take a quick look on what it looks like on the Renko.
Yeah,
by the way, wasn't that a beautiful walk the line?
I did a data download, and we did get a Globex VPOC shift to 68.
Okay, so let me move that up then. Things are dynamic. You got to stay on top of them. Okay, so yesterday morning we talked about that Keltner line walk that was setting up on the open, and it was a beautiful Keltner walk. So pay attention to those. All right, so currently right now, perfect. We have the Keltner center line right at 66. How beautiful is that? How is that truly setting up between the 66.25 and 67.25 when you get the Keltner center line at 66? We hold above that, a rotation up to test the Keltner line takes us back up to where? The naked VPOC at 70.75 and 71.50 area, which is our overnight high and our naked VPOC. See how nicely that goes? If we break below the 66, then we're below the 66.25 and 67.25, and a move down to test the lower Keltner line takes us down to where? Well, how beautiful is that? Right down into the range 60.50 and the overnight low at 61. See how well this lines up, and this is why I use the Renko with the Keltner. It takes a little bit of the noise out and gives me directions and channels and some really nice trade setups. So how much time do we have, Howard? Well, I'm really just going all
about 5 minutes.
Along. All right, so quickly take a look at gold. Again, I'm harping on the gold. I know that, but just want to see where we are in this big cup and handle. I'm still running long on gold. We're having trouble breaking back above the 38.2 retracement of the cup itself, and but we are holding the 1300 level, although this 1304 should be a key level. If we break below, we might have to make some adjustments in my thinking. Whoops. Let me just bring up the gold composite here. Where's my gold composite? I had it open earlier. I'm just blind. Alright, so I thought I had it open. I don't. So I'm not going to bother to try to open it. Well, I'm going to open it for myself, but it might take a little bit of time to load here. Let's see if it opens, how quickly it opens. While we're waiting for that to load. All right, so here we are, and I just want to. I'll have to do a download, but I want to draw a profile here, and I want to draw a profile. And this overall balance right here. All right, so you can see gold, same thing. You got a VPOC shift, a composite VPOC shift to 1284. Our current, and I'm even going to bring in this breakout day. Doesn't shift. The microcomposite VPOC is still showing 1284, but we've broken out of the value. The value area was 1302.90, and then we're trying to hold value now above, and the current 3-day microcomposite VPOC is 1307. But we've got this key line, which is this 1304.60 right now, with the value area high at 1302.80. If we break below that, I'd be looking for a test of the 1300 and the 1299 area, which the CLVN has shifted slightly down to 1298.20. Below that number, we're inside of value, inside a range, and below a centennial number, and we're likely to get a rotation down to the 1293 and 1292 area with a push down to 88. But the big number below us is that 1284, and we're likely, if we get into the 1200s again, we're likely have to come down to this area to find buyers again. And this 1284, this composite start date goes all the way back to 2008. Whoops, start date would be here. Yeah, it goes back to 10/24/2008. So that is a major magnet if we get below 1300. In fact, you might even want to short below that 1298.25. Get majorly short, and get your scales off at 95 and 93, with a continuation down to 88, but likely all the way down to 1284. All right, so that's what I'm looking at there, and it's 2 minutes to the open, so I'm going to shut this down. Sorry for my length again today. Hopefully you guys are getting stuff out of this. As always, trade well, trade safe, and we'll catch you on the flip side.